Welcome back to Dolomite. Today we'll be discussing Adore Beauty, ASX ABY. In terms of the structure, we'll first go through a company overview and then subsequently go through the competitive advantages as well as the risks of the company. Adore Beauty is an Australian online beauty retailer. The company is an integrated content, marketing, and e-commerce platform that partners with beauty and personal care brands to introduce customers to a wide range of products. Adore Beauty has both Australian and New Zealand websites, where the majority of their customers are from Australia. As at the end of FY 2020, they have serviced over 530,000 customers. In terms of its business model, Adore Beauty generates its revenue through online sales of third-party personal care products to, of course, both the Australian and New Zealand customers. Product verticals on offer include skincare, makeup, hair care, fragrance, and wellness. They have over 230 brands, as well as 11,000 products. They say they have three key elements to their business model, which includes range authority. Adore Beauty says they have a broad and compelling range of beauty and personal care products across professional, niche, and prestige brands. Best online transaction experience. The company states that they seek to provide an outstanding shopping experience by making the transaction experience as seamless as possible. This is led by AI personalization and recommendations. And thirdly, a data-rich customer engagement. Adore Beauty attempts to engage customers through an integrated content, marketing, and e-commerce retail platform that drives loyalty and increases the frequency as well as the size of the consumer transactions over time. This is done, for example, through Beauty IQ, which is a content platform that provides beauty news, tips, and how-to content in both written and video format. Through all of these 3 points, Adore Beauty says that this creates a powerful network effect that attracts new customers and brands to their platform. This, in a nutshell, is their business model. In my view, it is not particularly impressive, and when push comes to shove, they appear to essentially just be a reseller of products. It is accepted, however, that their range authority, that is, their relationships with product creators, is impressive and would, for example, take some time for a competitor to build a similar company with those relationships. In terms of the financials, in FY 2020, the company made $121.1 million in revenue. In FY 2019, they made $73.2 million. And in FY 2018, they made $52.8 million. You can see that their cost of sales is quite large. And in fact, in FY 2020, the cost of sales was $82.6 million. These large costs are not entirely unexpected and rather actually make sense since they are third-party resellers. That is, they have to buy the product as well as have the associated shipping costs for the product. Hence, this will always likely be a large cost. In FY 2020, they made a loss of $1.2 million. However, it should be noted that they made a profit in FY 2018 and FY 2019, respectively, of $1.7 million and $1.0 million. With all of that said, I think this gives a good initial overview, and now we will have a look at the competitive advantages. And then after that, have a look at the risks. In terms of the competitive advantage of Adore Beauty, I struggle to locate a substantive moat and barrier against existing or potential future competitors. Their best key strength is its creation of a data-enriched content and marketing platform. That is, they are forming a community of visitors and building trust and reputation. I suspect this could be particularly helpful in the beauty industry. They're doing this through its content platform called Beauty IQ, as well as its associated podcast called Beauty IQ Uncensored. which is in fact ranked number 1 for the fashion and beauty in Australia on iTunes. They also have additional tools such as BeautyWise, which is an AI-driven beauty recommendation engine, as well as the fact that they are planning to launch a mobile app quite soon. I suspect the mobile app will be a go-to place, so to speak, where visitors can read blog posts, reviews, guides, etc., as well as able to purchase the product in question. In addition to this strength, Adore Beauty also provides some further strengths. However, I do not find them particularly persuasive, so I'll quickly state them. These are 1, the beauty industry is a large addressable market. 2, they have a broad product range. I'll explain why in the risks section as to why this could potentially evaporate. 3, they say they have a scaled business supported by the necessary technology. In my view, this should be expected and almost assumed for any decent company, so I don't see it as a particularly strong competitive advantage. And 4, they have the ability to extract customer value over time. This relates to the idea of building a community, which I identified as the main strength. With all that said, it is quite interesting to note that Adore Beauty is going to create a private label. They have articulated that they will aim to leverage its customer knowledge, data, and experience to create a product for identified gaps. In the market. That is, they are not attempting to directly compete with the suppliers, but target a current gap. This is rather the only method that they can pursue in any case, because the suppliers will likely cut off their supply arrangement if they feel Adore Beauty is eating into their profits, so to speak. Management at Adore Beauty is currently aiming to launch these in-house brands in the second half of 2021. This will of course have positive effects such as building a moat and improving margin, i.e. by decreasing the cost of goods. To me, if they can maneuver into this direction successfully, then Adore Beauty may indeed become a more interesting company to consider. In terms of the risks, there are a few key risks which I have identified as being quite salient. The first is that Adore Beauty has quite high marketing costs, and it has been growing over the past 3 years. In 2018, the marketing costs were 4.5 million. In 2019, they were 6.9, and in 2020, they were 10.4. Further, this is expected to increase even more in FY 2021, since the first half only is expected to be 11.4 million. This is only the first half of 2021, so this suggests that the annual marketing costs will likely hit the low $20 million range. This indeed does not seem to be going down, and rather it is likely the nature of the business as a stockist reseller. This is because they need to recover on the costs of goods that they have brought from the suppliers. On the bright side, however, their approach of building a community, as identified previously, may allow for repeat customers, which may in the long run decrease the need for large marketing costs. However, this still remains to be seen. The second risk of Adore Beauty is the nature of the business model in being a reseller of third-party supplier products. The issue with this is it's unknown if they can retain existing relationships with suppliers and if they can attract new suppliers. The supply arrangements with Adore Beauty and the supplier are made on a case-by-case basis, with no guarantee of renewal. This means that the supplier may choose to go elsewhere or stop supplying the products at the end of a contract, which is unlikely to be long-term contracts, as the supplier, who has more bargaining power, will unlikely accept an agreement on such terms as, for example, the contract being quite long, and instead opt for short-term agreements. Further, in such contracts, there are also clauses where the suppliers may have a stock out. That is where there are not enough products to give to Adore Beauty. This in itself suggests some risks with their supply chain model. The third risk equally applies to the supply chain model in that the products supplied to Adore Beauty are not exclusive to Adore Beauty. Rather, the products supplied may enter exclusivity agreements with competitors of Adore Beauty, and therefore the products can no longer be supplied to Adore Beauty if they have entered such agreements. This again questions whether Adore Beauty has a sufficient and reliable supply chain model of products. That overall is Adore Beauty. I am personally not a huge fan of the business model as it comes with key risks. Before I invest, I would like to see how their private label develops as well as the ability to grow a community of users. With that said, it should be noted that Adore Beauty recently announced that their FY 2021 first half has performed better than expected by 7%, as the current lockdowns have assisted with online shopping.